Welcome to Chapter 2 Homework Help. Let me share my screen. Okay, so I'm already in Pearson, and we're going to look at Chapter 2 Homework right here. Hope your day is going well. Mine's going fairly well. Let's get started. And once again, as with all my other assignments, I will not be doing the multiple choice, but we'll just do the ones that I think you guys would need. So I'll do a couple of these, match the accounting terms with the corresponding definitions. Let's see, a record of transactions in date order. Record of transactions in date order, my guess is that's going to be the journal. The process by which companies produce their financial statements for a specific period of time is the accounting cycle. List of accounts with their account numbers. That's the chart of accounts. Let's give our answer a check there. Looks like we got those three good. So that's all you're doing here on this one is just checking the answer or checking the matching terms with what they are over here. Okay. And I promise you, if I go through the assignments and see that you guys miss this one and or this one, I promise you I will show you that video that, and if I haven't shown you the video, you need to ask me about it because everyone needs to experience it once. So anyhow, I digress. Let's go to the next question, see what we got. Right here, we're identifying each account, whether it's an asset, a liability, or equity. Let's look up here. Consider the following accounts. It's just giving them again, so we really don't need to see that. Read the requirements. I'm guessing it's just going to show that. Sometimes it's a little bit redundant, but it looks like we have a couple other aspects of this. So we're learning here whether it's an asset, liability, or equity. So interest revenue, because it's revenue and we're not breaking out into revenues and expenses, then revenues and expenses do get rolled up into equity. So we're going to throw interest revenue into equity. Accounts payable, that payable is a buzzword. It is a liability. So make sure we got that. This one's static too. So I am going to only do those two. And how about unearned revenue, which is a liability because unearned is that buzzword. So I know I'm going to check my answer a couple times. It's going to say, you got to do it. Got to do it right. Otherwise, this is your final check. So this is what happens when you do a final check. It just does it for you. Okay. So here, identify whether the account is increased with a debit or credit. We're looking for the normal balance. So I'm going to do a couple of them, interest revenue. Normal balance of revenue accounts a credit. Let's do accounts payable. It's a liability, a credit. Let's pick something like an asset. Supplies are an asset. So let's do a debit there. And utilities expense, we got a debit is their normal balance too. So let's go ahead and just check our answers. I don't like these whatever. Anyway, identify whether the normal balance is a debit or credit. We basically just did that up there. So just do it again. Because whatever increases it is its normal balance. So. All right, here we go. We got several transactions that we're going to journalize in this one. All right, so your numbers are going to be different. We received $18,000 from the owner. It says in exchange for capital. So we're going to debit our cash, credit our owner capital. And we're doing it for the amount contributed. Since this is the homework video, I guess I cannot confuse you by saying this. An owner can contribute whatever the owner wants. An owner can contribute straight cash. An owner can contribute a car. An owner can contribute a car with a loan still outstanding and contribute that outstanding loan to the business. So you can, as an owner, contribute both assets and liabilities. Our down here below this journal entry, we're identifying what the owner contributed. That's what the owner. We're recording this because the owner contributed something to the company. A utility expense of $440 because it is a utility expense and that we paid it. We're going to expense it because we've used it, and we're going to show that we paid it. I'm just looking for something that says utility expense. I guess it's paid cash on account. Paid cash expenses. That would be more correct. There we go. Purchased equipment on account for $2,600. Now, when we're talking about on account, what that means is we're owing that money. Personally, I'm going to use notes payable probably because I'm buying this with a note from the bank, but it doesn't really specify that. So we're going to put accounts payable and see if that's what it wants. It's a good chance it's going to tell me I'm wrong because I mean, it doesn't say we signed the note, so maybe that's why. I don't know. Sometimes it's a matter of just trying to understand what the book is looking for. Purchase equipment on account. All right, so it liked it. You're not typically gonna. I mean, there's some places you buy it for cash, but sometimes you're gonna get a loan too. Perform services for client on account. That means we are not receiving the money yet. So we are owed the money. That's a accounts receivable. And we perform services. Even though money has not exchanged hands, we still book the revenue because we did the work and are owed the money. So we'll perform services on account. Around $7,100 cash, signing a note payable. This one's the one where we're borrowing the money. I'm just going to go down here at the bottom and select borrowed cash by signing note. All right, our journal entry, we are receiving cash, and then we are going to credit that note's payable at this time because we owe it. We borrowed it. We eventually have to pay it back. Sad as that is, I can't borrow money and just not pay anybody. Lenora withdrew $250 from the business. We're going to be debiting the withdrawals account for the owner and crediting cash for the amount of the withdrawal. And I'm just going to look for something here that says owner withdrawal. All right, purchase supplies for $830 with cash. We're going to debit supplies, credit cash for the amount, $830. And then we paid the liability from July 5th. So July 5th, we paid off this $2,600. So what that means is we still have the equipment, but now we're going to pay cash for what we owed. So we won't owe it anymore. So we're going to debit the liability or accounts payable and credit cash for the amount of $2,600. All right, and that was it. Next question, now we're going to do the unadjusted trial balance. So I'm going to pull up these T accounts. T accounts are critical. I need the balance. This is not giving me the balance. So we're going to pull up our calculator here. And I hope I do this right because sometimes when I use the calculator, I make a mistake. So let's start off with cash. We're going to take cash, 24,000. We're going to add the 2,000, then add the 300. Then we're going to subtract out everything on the credit side, 11,000 minus 4,400 minus 5,000 minus 1,800 minus 2,450. So I have a cash balance of 5,650, and it's a debit balance. And that's it. I don't put anything on the credit side because it's a normal balance as a debit. Then we're going to go accounts receivable, land, ho, building, and equipment. So accounts receivable looks like we used 4,000. We're owed 4,300 and someone paid us 300 of it. So we're owed 4,000. Land, 11,000. Building, 30,000. Equipment, 12,000. Okay, too easy. You don't usually have to deal a whole lot with these other ones as far as usually your cash and maybe your account receivable. Everything else typically stays the same in the asset side when we're working on these early problems. Liabilities now, salaries payable. That's a credit. We're taking 4,600 minus 400. It should be 4,200. Notes payable is going to be the 30,000 minus 5,000, which is 25,000. Toyota Capital. Looks like we added $12,000 to the Toyota Capital, so that's going to be 36,000. We have Toyota withdrawals, and that was a debit balance of 1,800. Service revenue, We're going to add those together for 6,300. Salaries expense is going to be adding those together is 5,700. Property tax expense is going to be 1,100, and advertising expense $250. Now the object of our of this whole unadjusted trial balance is to add up our debits and then add up our credits and hope they equal. I got 71,500 debits, and hopefully we get the same amount of credits. We do. Hot diggity dog. Children used to like that. Hot dog, hot diggity dog. All right. Well, we're on the last problem here. Looks like we're going to be playing with T accounts. So what we're going to do is, oh, I dropped water. We're going to just pull open the journal entries, because if the journal entries are already done, all we got to do is post these to the ledger. We have cash debit of 11,000. So we're going to come over here. We're going to put in 11,000. I wonder what's here. Let's see. It's probably the date. Yep. So we're putting 11,000 in here. Then we're going to post London Capital right here, credit to 11,000. And do we want the date? Yes, right there. Utility expense debit for July 4th in the amount of $390. Cash, $390. July 4th. Do we need to hit post or something? Because how am I going to get a new amount? A new line? The post counts one transaction time begin by posting the event receiving. Oh, okay. I'm glad I'm doing this for you guys, because this is stupid. I really just wish that they didn't do it this way. So we got to do it one journal entry at a time and then click check answer. This is going to be tedious. Oh my gosh. Okay, well, I guess you'll learn it very methodically here. All right, so July 4th, we're going back to the utility expense for 390. Cash was a credit for 390. See, I wonder if they're going to have heartburn if I do this. I'm just checking because I'm curious. Oh, they were all right with it. Whatever. All right, now we're on July 5th. The debit to account, credit or equipment, credit to accounts payable. There's equipment. There you are. It was July 5th for 1,800. And then accounts payable. Sorry for the yawn. Whenever I talk a lot, like I think I don't breathe right. And then I start yawning. It's not that I'm tired. I do go dry mouth for sure. That's why I'm chugging water during this time. Said dry mouth, and for some reason my phone thought, what can I do for you? I had to stop it before it. Anyway, debit to accounts receivable. Where's our accounts receivables here? And this is July 10th. Debit to accounts receivable for 3,600. Credit to service revenue. Where are you? There you are. 3,600. July 10th. Really just got to keep going through here and doing all this. I don't remember if there was a second part of this. Compute the July 31st balance for each account. Okay, so what I'm going to do is I'm just going to kind of show you. You get the idea. I got to go through all. You got to go through all these journal entries, posting each one to a debit and a credit. If you're only doing one of it or only doing the debit, you're going to get in trouble. Okay. Yeah, I know. I'm just a final check. I gotta. It's gonna not like it because it's got to do that. I got to do this so many times. It's not even funny. Just want to get to the second half. Hope your day's going well. All right, now we're going to do the balance. I'll do the cash balance. We're going to take the debits, add the credits, or sorry, take the debits, add them together, subtract the credits. And we're going to have a debit balance of 15,200. Don't be afraid or don't forget to put the balance there. It's literally your only choice. I don't know why they don't just put it there, but there you have it. Notes payable will be 7,700. July 12th, or no, sorry, that's balance. I forget. Yeah. Let's do, yeah, I mean, you get the idea. So, and they're good. All right, that's your homework. Make sure you get it done. If you have any questions, of course, send me an email, but hopefully this helps. We will see you guys in chapter 3 now, I think. So, all right, have a good one.